All right, shifting gears here, staying in sports though. fuboTV's Q1 data came out yesterday and the stock down today more than 20%. Well, to unpack that earnings report as well as the road ahead for the company, I'm joined by fuboTV co-founder and CEO David Gandler. David, good to see you there. So as we saw with those first quarter, an earnings per share miss, revenue in line with expectations, and it did more than double from a year ago. Talk about some of the biggest headwinds and drivers this past quarter.
Yeah, so we had I would say, a relatively strong quarter with 98% revenue growth, 81% growth in our advertising business. In terms of headwinds, it's just a tough macro environment, as you already know. You've seen some capitulation over the last couple of days, which I think has really led to an aggressive situation with respect to many of the growth stocks. But for us, really, it comes down to hiring more people and continuing to execute on our plan.
Now, I want to talk about the North American market. There was some forward guidance that saw a decline in subscribers and revenue, but as you mentioned, they're consistent with some of this normal seasonal trends that you're seeing in business. Where do you see the opportunities within North America and outside of it?
Yeah, so the North American market is extremely strong. What we continue to see is that the macro trend around the secular decline of television continues. There are still an enormous number of households, roughly 72 million households that still have cable. And particularly as you go into a recessionary period, I think people will typically look for lower cost alternatives. And alternatives like Fubo allow you to maintain your current lifestyle, reduce costs. So we're very, very bullish on the business of aggregation in general in terms of cable bundles. So excited there. The advertising business in North America, I think, is going to pick up in Q2 through Q4. We also typically see some seasonality, some softness in Q1. But as you head into the sports season, we do anticipate both revenue and CPM to increase there. On the international front, I think we're still in the very, very early days. As I'm sure you know, we've acquired a company in France that also exceeded expectations with 305,000 paying subscribers. And that business is, again, in its early days, and we're in the process of unifying our technology platform. We believe there's about $75 million of savings over the next 3 years, or cost synergies that we'll be able to experience. So, we're in the business of building a live TV streaming platform. And there's over 1 billion pay TV customers globally. So I think the opportunity is immense.
And I want to talk Fubo Sportsbook because it was named the authorized gaming operator of NASCAR last year. Talk about sports betting as we see it's continuing to heat up. How do you see Fubo playing a role in that, as well as competing in the space with some of the other big names?
Yeah, very good question. I think in terms of competition, we have certainly proven ourselves as a competitor. We launched our video service about 1.5 years after companies like DirecTV and Sling, and where we had 1/100th of their sub counts, and today we're closing in on 45 to 50% of their sub bases when they have market caps of 20 billion plus. So I think in the gaming space it's very similar. We take a very measured and disciplined approach. We're continuing to develop technology that allows us to differentiate our product. In my opinion, we're not competing directly with the sports books, but we're creating an interactive experience that allows passive viewers to become active participants. And the feature sets that we're building allow this type of interaction that currently is not available anywhere. The last thing I'll say is that our goal is to really take advantage of our growing subscriber base. And leveraging that subscriber base to drive consumers that love sports into the sportsbook with really minimal cost to us. So that's sort of the game plan, and we feel that we're well positioned to take advantage of all of these macro trends.
And so then as we look at the long-term view then, what are your plans in terms of partnerships and ways to grow? We did see the JP Morgan analyst Philip Cusick cut his rating for Fubo to underweight due to concerns about the long-term business model. What are you keeping an eye on long-term?
Yeah, look, long-term, obviously I disagree. I think it's become very clear. If you look at the last couple of surveys that have been put out by Accenture or even Nielsen, where 64% of people are actually very unhappy with the streaming landscape. It's very difficult to discover content. It's difficult to find things that you're looking for. And you really can't leverage any of the new technology, the personalization that's coming out, forcing you to move from app to app, which is quite difficult. So in my opinion, I think that people want efficiency. They want an effective viewing experience. And, as I like to say, that 1 million people have voted for Fubo with their wallets. And, we're continuing to take market share from our competitors. And, we think that this is aggregation and bundling is the future of television.
And certainly, speaking of wallets, you ended the quarter with $456 million in cash. Talk about your plans for that money.
Yeah, so I think what you're seeing in our guidance and in our overall tone is that we're trying to strike a very appropriate balance between subscriber growth and operating leverage. And this, a fortified balance sheet gives us the flexibility to achieve our path to profitability. Our goal is to achieve cash flow or positive cash flow in 2025. And again, this is that those funds allow us to do that, particularly in a market right now that is extremely volatile.
And just lastly, I noticed that on Twitter, you regularly field questions from people about earnings, about what the company is doing. How important is that engagement to you?
Well, it's very important to me. I'm pretty sure it's important to a lot of the retail shareholders that don't get access to CEOs. But, we run a very transparent operation here. The folks at Fubo, from the management team all the way down, are working hard to deliver results. We went public 2 years ago into a pandemic with about 250 or 260,000 paying subscribers. And this year we're targeting over $1 billion of revenue, excuse me, and 1.5 million, roughly 1.5 million subscribers. So, my job is to make sure that people understand what we're doing, how we're doing it. And, I take every retail investor question very seriously.
I know they appreciate that. I can tell by the responses online. Thank you so much. David Gandler there, fuboTV's co-founder and CEO. Thank you for your time this afternoon.